Might have a shave today.
Oh, we're live. Good morning, everybody. It's the 18th of November. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, gentlemen.
Good morning.
You're right.
How are we both?
All right.
Excellent.
Days are fizzing past.
They are, aren't they? I can't believe it's Wednesday already. It's
halfway through lockdown.
Yeah, love
Supposedly, anyway.
Yeah, we're not going to get let out, are we? That easy?
Don't reckon?
Nah, not people from Sheffield. They won't.
They're going to put it back to the tiered thing, aren't they?
Yes.
Yeah, I think so. Yeah.
And we're tier 3, so I might as well stay where I am.
Yeah. Maybe they'll.
Hull is really bad, isn't it? Hull. They must be running around licking each other's faces in Hull. It's just incredible there.
I didn't realise it was so bad. I haven't been following it. I'm bored of it now. I've got COVID fatigue.
Yeah, I think we all have. Yeah. Markets like it.
Yeah, markets do like it. None more so than Bitcoin at the moment. Memories of 2017 flooding back as the charge continues. Another 15% has been added this week.
Can we?
No,
you can't, Ian.
you can only call it below 10,000, can't you?
Exactly.
Currently, hit 18,000. What's it at the moment? Yeah, still above 18,000 today. So going really nicely. Obviously helped by dollar weakness, which I'm sure we'll come on to shortly. Elsewhere, in terms of what's driving markets, it's stimulus driven really at the moment. It would appear there's no breakthrough on anything from either the US or Europe. Both Christine Lagarde and Jerome Powell commenting yesterday. Powell saying it's a long way to go in terms of the economic recovery, and Lagarde stressed that she's not sure it's going to be a major game changer for our forecast if they go ahead and do this bazooka that she mentioned last week. So that's not particularly encouraging for markets, although they still remain fairly elevated at the moment. Anybody want to share some charts and have a look at what's going on?
Someone else can go first because
I'll go
thinking.
Okay.
I've got oil on. There you go, just to throw everybody off. I was looking at that report, the report yesterday that basically said they were going to delay the output by, they're supposed to have an output boost in January. And then we saw that sort of leg up in oil. And I quite like this, but I'm going to get to that when I get to my gun to the head. But it's just, anyway, the dollar. Okay. How annoying is that? That was the call to the gun to the head yesterday, and it tipped up, didn't take the stop, but then it's moved lower overnight. There's no change, basically, in all the views that I had yesterday. I think the dollar is doomed. We do have a confluence area here, 88.6, 220, 224. But that is not a symmetrical pattern, but we are starting to see a little bit of stalling this morning. But I think that's just going to be an opportunity to sell into rallies, and the big focus is down here. If it gets to any of Steve's 13 levels, I suggest that you sell it. 93.13, 92.13, anything like that. And if you reflect all this back onto the majors, I still like these long-term pictures. Both of these, if you've been watching, are very bullish, but I think over the short term we're going to see a correction to the downside. But sort of I'm looking at all of these sort of patterns. We've got a reaction at the 61.8%. It wasn't very deep. We've also got a reaction at the 78.6, but it's not been very deep. So either of these targets could potentially be a top 119.67. or in this zone here, 120.28, 120.52, which will give it a new, it's not a multi-year high, but it will definitely be a new high for 2020 if we get up to those levels. Cable, again, I still think it's quite bullish. This has all been driven by the dollar. There's very little in the way of movement on the single currency basket. So we got a reaction off this cipher, came down, and I believe that we're now pushing up towards this level 134.06. So again, taking out the sort of last swing high. Dollar Swiss, not been as aggressive to the downside as I thought it would be, and I can't. As I said yesterday, I'm struggling to get any sort of decent patterns on it. Dips have been bought, but they're not being bought aggressively. And really, I don't see anything in the way of support until this level here, which is 88.50, which is a decent percentage move to the downside. Info line. So that's about nearly 3% losses from current levels. Dollar yen, I think, is quite interesting today. There's got a bit of a confluence zone. So if we look here, and this is me trying to work out for what I would call forward ciphers. So I'm sort of taking the big picture, which is the daily chart. And we've got a support level down here at 102.50. It's 88.6 and 161.8% extension. So it would make a perfect bat formation. And then I'm sort of reflecting that back onto an 8-hour chart and seeing whether or not I can get any confluence zones at the same level. So this is 102.50. That would suggest that we get an intraday bounce at 103.72. But again, that rally should be sort of sold into to move down to this level. So I think we could see a bit of choppy trading, and I don't know if that's going to mean a bounce higher in stocks. I'll let you boys or let Steve discuss that. Dollar CAD, I think, is the one to watch. I'm going to do this on the gun to the head. Every time frame or decent time frame looks quite bearish. So that's the monthly chart. The daily chart can't really get anything on it until all the way down here, which is around about 117. And this time frame, I think, looks quite good for a move down towards that level, and that's why I was going to discuss oil as well on the gun to the head, because obviously higher oil, we should see a sell-off in dollar CAD as Canadian dollar builds.
We've got crude inventories today in at 330, so that could be a good one to get some decent movement from on that basis. I've also got Canadian CPI at 130, so all happening on the Canadian stuff.
All in dollar CAD.
Lovely. Okay, Steve, you got some charts ready for us?
So it's all happening in the Canadian stuff, and Dustin Johnson won the Masters. He's Canadian, isn't he?
No, I don't think he is. Might be wrong.
He likes to party, supposedly.
I'm sure someone mentioned Canadian.
No, he's American. Do you know why it might have been that? Because he's married to Paula Gretzky, who's Wayne Gretzky's daughter, and I think she's Canadian.
I was going to say,
name, isn't it? Dustin.
American and Canadian, aren't they the same thing?
Oh, careful now.
No?
No, Gretzky's English as well, American as well. Sorry. Yeah, go on, Steve.
Maybe that's where he gets his cannabis from, or whatever.
Wasn't going to mention that.
Right. Anyway, let's focus on the markets.
Joe's got some bird on. What's going on?
I'm looking at Dustin Johnson's wife.
Quick, don't flick to Joe's screen straight away. Jesus. Go back one screen, please, Joe.
Careful now. Come on, get on with it.
Turned into a soft porn channel all of a sudden.
Let's have a little focus on, weekly chart in FTSE doesn't look quite as good after yesterday's price action. It's almost a hanging man candle on the daily chart, and this sort of like saw this the highs we saw the previous day rejected quite well, and we sort of see it even breaking down to the short-term time frame, although it seems to have reacted off the 63.10 level, and it's trading around 63.50 now. On the DAX, a little bit of a similar situation. When we look at the weekly chart, we're below these key resistance levels, and stalling and a little bit sideways price action. We've closed around the same level for the last 3 days, and but CAC is performing slightly better in terms of what the candle looks like on the weekly chart. It's only had a small pullback from the high of the week at 55.20, currently trading at 54.80. I'll skip SA40. and moved it out. Obviously, we had the all-time high hit above 30,000, and again overnight we traded just above there, and just trading currently below there. So it's going to be quite a big psychological level. Again, if you look on the daily chart, yesterday's price action is a hanging man candle. That's a negative formation. It's where price action has opened on the high, had a pullback lower, and then rallied but not quite made it to the highs. So it could set it up for maybe a bit of a sell-off today. Nasdaq, again, that's this original trend line we drew, which was broken by the 9th of November price action, held yesterday, and prices rejected. So there is signs of it, a little bit of stalling on the indices market. I suppose that is we got Bitcoin, as we said, trading at elevated levels around the 18,000, targeting the psychological 20,000 level. And but yeah, I'm still sort of, the jury's out for me on the indices, although they've sort of started the week and performed okay on the week so far. It looks like we're getting a small reversal there now. I don't really want to talk about gold because it's ruining my performance this week in the gun to head, but we will talk about gold anyway because I'm professional and I'll march on. So this is the gold chart. Candle last week was, as we said, almost a bearish outside candle, but had a rally into the end of the week, and that staved off that negativity. Although this week we haven't really been able to march past the $1,900 level and rejected a price action from there. We had the swing low down to 1864, which hit this trend line on the hourly chart really nicely. So we're still in this slightly bullish sideways channel, but if we think about where we've come from, this is almost a potential flag formation, bearish flag, with a and we could potentially see a bit of an AB equals CD play, and if that's to take place, the measured move target, if we do get this break, is down to $1,790, $1,800. So that is where I'm focused at the moment. I'm still overall slightly bearish of equities, although I'm going to wait for the break before I dive in, and a little bit the same in gold now. My long-term play on gold is still bullish. I think we just need a sort of normal correction, if we can say anything's normal nowadays, maybe down to the 61.8 or the 50% level before we continue higher in the long term. That's my view.
Thank you, Steve. Okay, so let's have a quick look at the guns to the head stuff from yesterday. There's not much to get excited about, unfortunately. We had our three trades as usual. I went long of silver, Steve went long of gold, Ian went short of the dollar index. So we was all kind of looking for all of our positions were highly correlated basically yesterday. Unfortunately, Steve and I were stopped out. Ian, as you said, it has sort of sold off this morning, but come 9 o'clock yesterday, you were down by 5 ticks or 0.31 R. So we didn't make any money yesterday, and we're consolidating a bit. We haven't been able to catch any winners over the last couple of days or so of any note. So hopefully we can correct that today with some decent picks. Ian, you sound like you're ready to give us something.
Born ready, mate. Born ready.
Go on then. Take over. You got the charts.
I like this in oil, but I only like this in oil for that dollar CAD. So we're starting to see a bit of a boost to the upside in morning trade. Now this is a cipher pattern up here. It'll be a perfect cipher. It'll be a butterfly formation at 45.05. So higher oil should mean lower dollar CAD. If I go to this time frame as well on oil, I like it because it's just above the 61.8% pullback level, which is at 44.11. So that will probably wash out some sort of swing traders who have taken shorts, only for it to move lower again. And if we go to this time frame. This is a expanding wedge formation, so it's broken that expanding wedge. They're not as good as normal wedges because the target level is just the start of the wedge, but it does show that it should have at least a bit more upside momentum to get to $44 a barrel to take that target level. Now, if we reflect that back onto dollar CAD, basically every time frame in dollar CAD is pointing lower. So I'm going to try, this is sort of breaking my rules as well, because normally I try and trade the formation when it's finished, not while it's actually in the process of being made. But because of all of those reasons, I'm going to have a go today, and we've got Canadian figures out. So I'm going to go for a bit of a gung-ho, 130.76, targeting 127.78 with a stop at 131.21, gives me 6.6 R.
That would be very nice.
6 R?
All the sixes.
Wow.
I'll see if I can get 6.66, shall I?
Yeah, the devil's number.
I'm sure you won't have to look far for that.
Sit on your shoulder.
Ask the wife.
Okay, Steve, you got one, or do you want me to go?
You go then.
I am going to keep banging the same drum that I did yesterday, and that's buying silver. Yesterday I was looking for a breakout of this consolidation / wedge. Never materialized, but looking at it this morning, it's drawing me back in because it's had a decent breakout of this short-term downtrend, as you can see here. Already a decent move, so hoping it can continue that. We're currently trading at 24.66. Going to target a move up to 26.00, and I'm going to place a really tight stop loss at 24.44, which is 6R, if that plays out from here.
Good luck.
Thank you. Steve.
I'm a little bit...
Have a look at gold again.
Yeah, I will have a look at gold again, but I don't want to look forward and change my mind like you haven't done. So let me...
What's the saying? Fade them in, always win.
Yeah, well, maybe.
Average in, always win, yeah.
Yeah, I mean, basically, we got the overnight swing low got down to this 1875 level. So I think this is basically a key level from a risk reward perspective. So I am going. Joe's talked me into it. He's convinced me that I'm right in gold. I'm going to buy gold, and I'm going to have a stop just below this level. Stop's going to be at 1874. I'm going to get in. Where's it trading now? 1884.3. So my stop will be at. I like to keep things round and even, and I'm going to go for. That's too much, mate. What are you doing? I'm going to go for a 3-to-1 risk reward trade on this. 1914. 30. The real sort of like level I've been looking for is this 1921 level.
Go on then.
There, I'll go for it. 3.7 to 1. Right, I'm going to put that on as well. I'm going to buy gold now. What a muppet I am.
Okay, so I'm buying silver, Steve's buying gold, Ian's selling dollar CAD. As mentioned earlier, we do have some Canadian data due out today at 1:30. That's the CPI number. Price is expected to rise to 0.1% month on month. After that, we do have US housing starts and building permits at 1:30 as well. And then at 3:30, we have the crude inventory numbers, which are due out. So I think that's pretty much it on the data front. Any more speakers due out today, Ian? Have you seen?
Sarah Butchers, Wilkins, whoever he is,
Whoever that is.
Yeah, 2:15 Bank of Canada, but that's just before the figures, so I wouldn't have thought. And Bailey's on again tonight at 5:30. And you said Fed Williams, didn't you?
I didn't say that, no.
6:15 tonight. So there's some speakers later on today, and Bank of
Excellent.
England's Howden is on at 11:30. So yeah, loads of speakers again.
Okay, keep an eye out for any headlines that emerge from those then. Okay, I think that's pretty much it for today then, gents, if you're happy to wrap it up.
Indeed.
Lovely. Cheers.
Excellent. Have a great day, everybody. We will be back tomorrow morning.
Enjoy.
See ya.
Cheers. Thanks.